this sort of thing, this affordability reset, that could likely lead to actually seeing some growing house prices this year. Kia ora, and welcome to New Zealand Property Market Podcast, brought to you by Cotality for the 16th of March 2026. I'm Head of Research at Goodall, and today I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, I think every week we're going to have to catch up about this conflict in the Middle East, and it'll probably typically wind into our chat around the economic data that we include every week anyway. But before we get there, I do want to just talk about the Affordability Report, which of course you released last week. This was looking at the affordability data for Q4. It's a 6-monthly release that we put out there. And of course, we do have the data more regularly updated than that ourselves, but we put the full report out last week. Looked like it went pretty strong in terms of coverage across the media, mate. Do you want to take us through the key insights from that and how that release went on?
Yeah, it was pretty well covered. I mean, there's obviously bigger things going on in the world at the moment than our housing affordability report, but yep, people still picked up on it. I think because I suppose in some ways it sneaks up on you a little bit, but we have seen quite a big improvement in housing affordability over the last, let's call it 4 years. You know, house prices have either been flat or falling over that period, interest rates down, incomes up. Of course, you will have seen an improvement in housing affordability, but I think it's been to the point now where, you know, in some measures you'd call it sort of a lot more normal. Not saying through any of this that housing's cheap by any means, but when you look at housing affordability in a relative sense, it's certainly cheaper than it used to be, and on some measures back to average. So yeah, that's a bit of a circular story right there. But so I think it probably got lost a little bit in all the other coverage of news, but still a good message coming through from our report. So the measures themselves. I mean, house price to income ratio is back down to 7.2, which is still a little bit above average of 6.8, but a lot better than it used to be. Years to save a deposit is back below 10. We're down to 9.6. The average there is 9. So again, still a little bit above average, but not too much. And it's improved improved a lot, I should say, from where it used to be. At the worst, that years to save measure was up at 13.4, I think. So quite a big improvement on that measure. And the mortgage payments one, which is probably the one I think that means the most to people, because it's I guess, you know, it's how much it's actually costing you to service that debt and pay that mortgage, which is 42% of gross household income now required to service a new mortgage. Now, still a lot. So as I say, not saying housing's cheap in here, but 42 is back to the average. So we've got these figures going back to 2004, and so yeah, 42% is the average over that period of time. So again, not cheap, but you know, you'd say, well, it's back to average. It's kind of normal in air quotes, and certainly not as stretched as it used to be. At the peak, that measure was 56%. So we've seen quite a big improvement on that one. And some parts of the country, I mean, below average. So you look at Auckland, 44%. The average for Auckland is 48. So Auckland's below normal in terms of debt servicing. Wellington's at 37%. The average for Wellington is 40%. So it's a market that's below average in terms of debt servicing. So yeah, I guess it just shows, like I say, it can kind of sneak up on you a little bit. But when you get a housing adjustment that's been going on for 4 years, you know, you can see these measures improve quite significantly. So, you know, people will just be finding it a little bit easier out there than what they have done for quite a number of years. So, I mean, the analogy I found myself using was the sort of car thing. You know, maybe the handbrake is off in terms of housing affordability. We're not accelerating. You know, maybe it's a sort of first gear scenario, but at least that handbrake that has been on the market from stretched affordability in the past, well, even going back further than 4 years, 5, 6 years during that upswing we had even pre-COVID. You know, that handbrake perhaps isn't there to the same degree that it used to be. So that was kind of the main message. Renting is still a challenge for sure. So our renting measure is still above average. 28% of gross household income required to pay the typical rent. The average there is 26. So it might not seem much above average, but when you put it in relative terms, it's still a fair margin. And I guess the thing for renters I'm really conscious of is that, you know, a lot of renters will be paying the average rent, but they might not have the average income, and it might be below the average income. So these measures probably understate the picture a little bit for the typical renter. So I think renting's still definitely a challenge. So that's going to be an issue if you're trying to pay the rent in the meantime as well as save the deposit to get on that ladder in the first place. So I think that's probably still where the challenges are. Once you've got the mortgage, you've secured that. Servicing the debt is actually easier than perhaps it has been. Not saying it's easy, but a little bit easier. So yeah, but on that deposit front, I mean the LVR speed limits help there. We know lots of people are getting in without 20% deposit, so I suppose that's one bright spot. But generally, there's still that renting challenge. Saving a deposit's probably still a bit of an issue, but once you've got over that, with interest rates where they are, the servicing that debt is probably a bit more comfortable. So yeah, not cheap, but cheaper than it has been for a while.
Yeah, exactly. There's a couple of points I want to pick up on there, I think, because there's some important things that you've touched on. I think, first up is to say, you can't beat seeing these things on an actual chart. You've talked through it well there, but things like the rental chart, when you see it essentially just going up over time, yes, there's been an improvement over the last quarter or two where that line starts to dip away. But when you compare that to the other measures, you can see how difficult it is to be a renter. And despite that recent improvement, because rents are finally falling, it's still pretty tough when you look at that in a long-term context. I think the word you've used a lot today is relativity. It is that context, is to change over time as well. That's a really important one. Again, you can see this on charts when you see the trend change of each of these different measures. When you're looking at the simple house price to income ratio, you can see the improvement that occurred straight away once values fell away. But I think more importantly, when you look at the mortgage affordability measure, that's the one that I think is the most important, particularly these days. It does show, most people, of course, we know, get a mortgage when you buy a property in the market. So that's the one that really matters. Can you get the money from the bank? Can you afford the payments you're going to have to pay based on that interest rate, as well as the price of the property and what typical income is going to be? So to me, that's the one that I pay most attention to. When you look at that on the chart, you can see that that line, that ratio, that proportion of income required to service a mortgage, essentially, aside from sort of quarterly volatility, stayed flat for about 2 years. Started to improve in the last year or so as we saw no growth in property prices, interest rates fall away, and so your payments improve. And now that's got to that point where, as you say, it's actually back to that long-term average nationwide, and in some cases actually better than that one. So, and that's the one for me. And you talked there, I like that analogy about the handbrake. It's the way I've been talking about it is, we've heard in the last few years that the level of willing demand has increased, right? More people are looking at houses, more people are out there looking, more people are keen to buy that property, whether it's an investment or a first home or whatever. But, maybe sometimes they can't quite afford to get the money required to pay the dollar value that the vendor wants. Now, we know they've had that power, the buyer, so they haven't panicked or, had to pay those crazy levels or what they might see as a higher price than otherwise. So, we've seen that market not grow in terms of value change, but I think we've still not seen, things necessarily take off, because that level of demand, while it's been willing and people are there wanting to buy, those level of prices or the level you've got to pay in your mortgage is still a little bit high. And so I talk about it as, this, now that it's got back to those long-term averages and what I call the affordability reset, because it's got back to that level, that we can see that potential from it going from willing demand to real demand. And if it's real demand, then the fact you might have two able buyers looking to purchase a property, then you have some actual competition, and that can lead to some upward pressure on prices as well. And so that's where, when I talk about this in a broader sense, I say, it's this sort of thing, this affordability reset, that could likely lead to actually seeing some growing house prices this year, when I know everyone's talked about there should have been, or would have likely been, house price increases last year and even the year before, but it never really came through. Yeah, that was, even though things were improving, that ability for people to go, I'm willing to actually turn into reality, hasn't been there. Now it is, because those affordability metrics have genuinely improved for the amount of, actual real buyers to be there, putting bids in, driving up competition and seeing some upward pressure on prices. So to me, that's why this has been so important. And this is why it's a core part of the conversation. Now, we've talked a lot, and we will continue to talk about the fact that the broader economic situation, and particularly the labour market, will still have an influence over this. But I think still it's an important measure to understand that relativity is really important. And that's why we say, that it's in an improved situation now to see things grow. But, back to long-term average, isn't below long-term average either. When you look at that same chart, the mid-2010s, that line was below the long-term average. It had to have obviously been below it for some period, because we know we've been above it for a long period too. So it's not like things are super awesome and really affordable for people to get that mortgage. It's just back to being the same as the average anyway, over that 20-year period, and that's certainly better than that's been for the last sort of 4 or 5 years. And so that's where I say the fundamentals, or the market's at a situation where we could see growth come back, and affordability plays a key part of that. We still talk about that growth rate looking relatively small, but growth outside of, or following a period of very little growth, there's obviously a slight change in the market. But yeah, as I already touched on, there's obviously some things throwing spanner into the works there, so we'll acknowledge those shortly as well. But anything else jump to your mind there? I'm just looking through any other sort of the show notes to see if there's anything else we sort of missed in talking about from the affordability release.
I guess I'd just add that when we talk about average, and we've got to use some kind of benchmark for normality. Now, that does not suggest, or not implying, that this is where it should be, or that housing is cheap or anything like that, and there's nothing more to be done. There's always something more to be done, but I guess we've got to have some kind of benchmark, and averages are, they tend to work. So I suppose just making that point, that we're not necessarily saying it's where it should be, or that's normal or anything. It's the average through time. Which benchmark, you got to use something, and it sort of does seem to be a pretty good one in all sorts of parts of life. So yeah, that's I guess all we're saying. 42%'s been the average. It's back down there. It'll be difficult for some people. It'll be a lot easier for some people. There's always that distribution around it. So the people will make their own judgments on that. But taking it face value, back to average, it's about perhaps normal.
Yeah, exactly. That's a great point. And you touched on it anyway with the rental information, right? That we're using a median income across everybody, not a median income across people that rent, which is very likely to be lower than that. So 28% as a number, or 26% as a number, isn't it one we want to focus on? It's all about that relative to time, across time, and relative to different regions, that I think is really important across all the different measures. I think it's a really important one. I did see that this was referenced directly and repeatedly in Parliament last week as well. So I suppose from the government's perspective, it's a pretty good news story, saying that affordability has improved to a lot better position than it has been in the past. But we do have to acknowledge that there's going to be difficulties for other people trying to get into the market. Again, when you talk about averages, when we know that the labour market hasn't been as kind to younger people, for example, those younger people trying to get in, if they haven't got a good job or they haven't got strong growth in their income, they're not going to have seen this improvement either. So yeah, I just think we need to be really clear about the use of this and the way that data is put together. And on that note as well, I think we should mention the fact that it is, I think, the first read of affordability for Q4. Now, yes, it might seem like it's pretty old news, and we'll talk about GDP data, which is coming out this week, for Q4 being pretty old itself. But I think this is the first, report or measure of affordability, housing affordability, to market for this period of time. And this is made possible by the fact that we use modelled income data from Infometrics, which enables us to do this. So part of the reason all the other measures of affordability, which need some form of income measure, take so long to get to market, is because we don't get strong or fast-moving income data, from Stats New Zealand or any other source. But Infometrics do have their own version where they model the change in income over time. We use that series along with our own housing information, of course, which we do have a lot sooner than a couple of months later. But matching those two things together definitely gives us the ability to get this data out there before anyone else has a measure for where affordability was at in the most recent completed quarter. So just a chance, I suppose, plug that value of it. You'll no doubt see other measures come out over the coming months as well that'll say the same thing as this. But yeah, that's just another plug for that one. And as I said, always good to see that coverage reaching different places. Parliament, they also reference the strength of first home buyers, which again talks to the fact that affordability is pretty decent, particularly for anyone that's currently renting. High level or a low level of affordability, pay a high proportion of your income towards your rent going into a first home, you can see that affordability for first home buyers is actually better than it's been for the last few years. So that those two measures tie in quite nicely with our strength of first home buyer data, which comes out monthly as well. And I'm sure we'll talk about more next week. We did get February's data, but I want to maybe hold that back for next week's chat as we put our chart pack out this week anyway. So we'll leave that one for next week. But as a quick tease, it did show that first home buyers jumped back up in February after a quieter January. January, which is also pretty seasonally normal as they seem to take that break in January. But yeah, that'll probably do us for the affordability chat, Kelvin. I do want to move on to the macroeconomic data of the week. This week, I thought maybe we could jump back into migration data. I don't think we've talked about it very much for a while now, but it kind of brings a bit of a potential positive news story too. So yeah, do you want to take us through the data there? And then I think we can talk through the implications and then move that into a broader economic chat about, both domestically and internationally, what's going on at the moment.
Yeah, migration may be turning around. There's a bit of volatility in the figures. You can have revisions, and they can be up and down. So you're never quite sure. Just the way that these figures are compiled means they can be prone to revisions for up to about sort of 12 to 16 months, something like that. So keep that in mind. But that's always a feature. So there's nothing new there. So what we've actually seen in the past little while is just some hints of departures. They're still quite high. There's still a lot of people leaving, but departures are just easing off a little bit, and arrivals have started to pick up, particularly of, I guess, new migrants to the country as opposed to returning New Zealand citizens. So it's kind of the pickup in that net gain has been driven by new people coming to New Zealand, basically. So choosing to come to New Zealand as opposed to some other country that they could choose to go to. So we've had about 23,000 in terms of net migration over the past 12 months. As I say, driven more by those new arrivals starting to just improve a little bit. It's the highest we've had since December 2024. So it looks like we're through that trough and we're starting to come back up again. Still below the average now. I've heard different averages thrown around here. I think it depends on which time period you choose, which average you'll get, which is another sort of quirk about averages and stats, I guess. But the longest time series in my spreadsheet, I just take the full average for that history. It's back to about 2001, and that's over a couple of different measurement ways of approaching these numbers. So there might be a kind of serious break in there, but based on that longest history of data I can get, taking account for serious breaks, you get an average of about 31,000. So the 23,000 we've had lately is still below average, but it does seem to be coming up from that trough. So I guess just is consistent with, I suppose, the belief that the New Zealand economy is picking up. It's looking relatively better in terms of the labour market strength, and I guess just general economic performance compared to where it was, and maybe compared to some other countries. So you tend to see this as it's all about relativities. As a particular country starts to look a little bit better from a job perspective, that's where the migrants will tend to go. So I think even if it's not clear in all the data series we're getting, I think there is a belief that we're starting to turn around. And it becomes circular as well. You get more people in the country, you get more spending, that drives economic activity too. So can get a bit circular, but I think that belief that things are turning around is maybe starting to be reflected in these migration numbers. It's good news. Obviously, it has other pressures. We see it in the housing market, for example. We've seen in big migration cycles in the past that you want migrants coming in for more skills and spending in the economy and that sort of thing. But of course, then you create pressures elsewhere, and obviously the housing market's one of those. So recently in that rental side of things, even though the level of rents is still high and renting is a challenge for people, they haven't been growing. And in fact, they've been sliding backwards actually in some parts of the country. So I suppose you'd expect as net migration turns around, we start to see a little bit more pressure coming into that rental sector. So I suppose landlords will be potentially happy about that, but I just think the fact that the level of rents is still very high. There's a tenant affordability restraint there. So not expecting that if and when we do see this net migration balance continue to rise, I'm not necessarily anticipating we'll see a big turnaround in rental growth, but that would be the sort of long run story. But right now, I think we're probably going to see migration continue to improve a little bit, but does it feed through to a big boom in rents? I should say, seems a wee bit unlikely. So I think you have to view it as good news. People are seeing us a bit more positively, but we're definitely not into sort of a big pressure situation yet in terms of population growth or pressure on the housing stock.
Yeah, yeah. No, I think that's exactly right, right? Like, yeah, down to its basics, of course, more demand means more upward pressure on something. So I think that makes sense, especially because we know new migrants essentially have to go into that rental market first, unless they're from Australia or Singapore. That's where they're going to have to head into from a housing perspective straight away. And so, yep, I think more demand means the potential for some upward pressure on rents. But as you say, it's not exactly taking off, and it's going to take some time for that to flow through to that increased rent as well. I wonder also, obviously this data's all up to a period that was before the global conflict that's been going on more recently as well. So I'm not saying this is a reaction to what's going on, but I do wonder about the potential impact of what's going on in Iran in particular, having an influence over what might happen in the future. And I always wonder about the potential for us to be seen as a safe destination further away from these areas. I wonder the influence that might have on where migrants might go in the future. Not to say we're necessarily more safe than somewhere like Australia, but as you say, if we're seen as a safe place around the world and our labour market and economy is starting to grow, that we might see that turnaround just continue on as well, which as you say, in terms of more people here and that feeding into it, an improving economy, that's probably seen as a relatively good thing. So I don't know if you want to sort of touch on the potential for that, and it really goes into a conversation around everything that's going on over in the Middle East at the moment. And I've sort of been saying in my presentations that it's changing daily, right? Like I presented to at one conference 2 separate days, but different audiences. And so I just had to say to them, between day one and day two, there's going to be a bit of change in the expectation on this, because one day you wake up, you read the headline that Donald Trump's saying that the conflict is pretty much done, the war's almost over, and then the next day you're hearing the strait's going to be blocked for months. So this does change quite a bit. So I feel like we do need to just sort of check in on the latest, and I'm keen to get your read on where things are at. Particularly, I'm interested in how do we as consumers and people in our economy start to weigh up what is the real impact going to be. I know it all depends on how long this goes for, but truly, what is the real impact going to be? I know that we're balancing, there's going to be increased inflation of a lot of things because there's this constraint on getting oil out of the Middle East, which affects our petrol prices and other things that, shipping and all those other things that require that. But then, you've talked a lot about how it's going to reduce global growth. So the fact that we're spending more in these certain areas, in petrol and shipping and food and all these other things, means we're not going to be spending money in the rest of the economy. And so that's going to see less global growth, less local growth, economic growth, and that's going to provide some downward pressure on inflation, as well as, of course, the fact that the economy is not going to grow by as much. And so, then there's going to be this balance for the Reserve Bank. Now, I don't think we've really heard anything directly from the Reserve Bank since this conflict started. So we're sort of awaiting that first time. I can't remember if I mentioned it in the podcast last week, but certainly I've been talking about more recently. I think we're hearing from the governor in the next week or two on her take on the economy in general at a speech. So she'll have to touch on this sort of stuff. Otherwise, we're looking towards early April for the next official cash rate decision and their statement to follow, whether what their take is on this, and that's what matters, right? The Reserve Bank's take on this, as opposed to ours, in terms of what we think is going to happen from inflation and global growth. What do we think the Reserve Bank's going to take, and how can people maybe use that to help them make smarter decisions now to protect themselves in some ways in the future? Because I think today, certainly feels like resolution for the conflict in the Middle East is some way off. So any talk of this ending anytime soon doesn't feel like that's very realistic. Yeah, so I don't know. How do I pass that to you? I think, I'm just seeing daily volatility and expectations of the length of this disruption. So what's the latest, and where do you land on balancing this, increased inflation with lower global growth, and how the Reserve Bank's going to be able to try and decide what to do off the back of that?
Yeah, so I mean, you're right. So those migration numbers we just talked about were up to January, so that obviously well predates what's happening lately. I mean, I've been sort of talking about it. It's a March thing, even this whole Iran thing is a couple of weeks now. So we're even February data was sort of clean, if you want to call it that, from the perspective of this latest conflict. So yeah, those migration numbers definitely predate it. Even we get Q4 GDP numbers this week, and just touch on those quickly. And this are out Thursday this week. Some kind of expectation that we see growth in Q4 of 0.5%, maybe a little bit less. There's a wee bit of variation around that. Some banks are suggesting maybe even quite a bit less than that. Some might be a little bit more, but either way, there was probably some sort of economic growth in the fourth quarter of last year. But those numbers are always out of date anyway, and I just think even more out of date given what's happened in the past couple of weeks. But even thinking about that timing thing again, if you're thinking about a Q1 GDP number, when we get that in another 3 months' time, that's going to have January and February in it, which were pretty clean from a growth perspective, and then March will potentially be an issue. So judging it from an economic growth perspective is still going to take a fair bit of time as well. So short story around that. Q4 GDP was probably up to some degree. We'll get the numbers on Thursday, but it's kind of going to be even more out of date than normal, is the way that people have been viewing that. I suppose in terms of what's been going on lately, and yep, as you say, it all depends on how long it goes, and nobody knows. You get different reports on that every day. I suppose with most things, I try and sit somewhere in the middle to keep a bit of balance. I suspect there does seem to be a wee bit of hysteria in the media about some sort of elements of this, but at the same time, you can't downplay the risks, of course. So I think with most things, it's worth trying to keep a bit of perspective. But obviously we're going to see some near-term inflation from this. I mean, that's already baked in. We've already got inflation. Petrol prices are up. That's sort of the initial sort of impact of all of this. But I guess for me, I think it probably is more around that medium-term thing, which is, and how long do you find the medium term? That's up to a wee bit of judgment, but it's that medium term, and because this is pretty much a tax. People have still got to travel around. Yep, they might change their behaviour a little bit, but pretty much a tax. And if you're paying more for petrol, that's simply less that you can spend elsewhere. So that dampens economic performance, spending, just at a point when we sort of look like we're getting going again. So I think that's probably the bigger thing, is that just when the economy was starting to turn around, we can then get this coming along. People have less to spend on restaurants and bookstores and whatever it is. So there's going to be that medium term economic impact. And also, a lot of our growth lately has been driven by the primary sector. It looks like sort of the actual prices of commodities are holding up, but if you can't get it to the markets, well, then you're not going to get that money in. And so it's probably that shipping restraint on getting products around the world will hamper our export sector. So that's going to feed back into weaker economic growth too. So, I'd be thinking, and okay, not denying the cost of living thing is going to be painful. I pay higher petrol prices. It's painful. That's going to be a factor. But I just wonder if the bigger impact is more along that recessionary thing, that impact on economic growth, job security. Just when it looks like the labour market's turning around, that could start to sort of feed into that. Now, obviously, we all hope it's really short-lived and it's finished tomorrow. But what did you say just before we started recording? You hope for the best and plan for the worst. And I suppose you've got to make your risk assumption is that it goes on longer and longer. And so that's when it starts to feed into weaker economic growth. And so, how does the Reserve Bank operate through all of this? Well, hopefully it's short-lived and they don't need to do much. But obviously, the longer it goes on, then it becomes this real delicate balance for a central bank, because you've got inflationary pressure. That's their number one target. Keep in mind, they've got to manage that inflation number over the medium term. So, all else equal, they'd be looking to push up the official cash rate to deal with that inflation problem. But in the meantime, you've got a weaker economy, and it brings in that whole stagflation thing. And at a time when you have high inflation and a weak economy, what does the Reserve Bank do? So hopefully, I don't think we're there yet, but that's obviously the risk that could start to emerge. So me personally, I mean, cost of living is obviously a big problem for everyone, but I think that the thing that's in the back of your mind is what this means for long-term economic growth, and particularly when we've been relying on the primary sector. Shipping problems are going to be an issue there, as well as just that tax effectiveness, effectively where people spending more on energy, they've got less to spend elsewhere, so that feeds into weaker economic growth too. So it's bad timing on lots of different fronts, of course, but certainly from New Zealand's economic performance perspective, it's not great when it just started to look like it was picking up. So I think that's the thing I'd be sort of more concerned about at this point. We hope it doesn't get there, but yeah, it's definitely got negative growth effects. Now, would the Reserve Bank react by cutting interest rates to react to that? I mean, tricky one, because we're going to have some inflation in the medium term too. So I think we really just got to keep watching, hope it ends shortly. But yeah, for me, that longer term risk is that weakness for economic growth, which itself will help to pull down inflation too. So I suppose that's the silver lining. But yeah, it's unfortunate timing, of course.
Yeah, a lot to weigh up though, eh? And so I think it's one we just have to keep a really close eye on. There's, the implications of course, the weaker New Zealand dollar as well, and the exchange rate going on there too, which, might need them to push up the official cash rate sooner. I don't think anyone's still talking about it happening in the next couple of months. There's no point fighting things, right now with the official cash rate. Still need a little bit of time to see how this plays out. But I think the question is definitely becoming more about, hey, look, November's almost a lock for an increase in the OCR, depending on how things play out. And then that question about does it come one further forward is probably becoming, that percentage increase of that chance is going up every sort of day or every week or every, extra period of time that this conflict goes on as well. So yeah, look, still lots to take in there. And I just say, pity about the economic data taking so long, but I know we do have the NZAC as well, which we'll keep a track of to see how each of those months do play out once we get that data as soon as possible. But yeah, just one to really watch for. And yeah, as you touched on, we'll look for Q4 GDP data this week. Still be interesting to see, particularly when you get some of the detail about which parts of the economy. I think there were signs that other parts of the economy were starting to improve. It wasn't just agriculture that was going to take us out through this growth phase into this year. So it'll be interesting to see some of the detail behind that GDP release. And yeah, that'll be the macroeconomic data release we'll talk about next week as well, on top of what I mentioned earlier in terms of the chart pack and by classification and sales volumes for February as well. So we'll save that all for next week, but that pretty much does us for property and economic chat this week. So if that's all you're here for, please do go and check out the links and things I've left in the show notes before. Go and see those affordability charts themselves. As I said, they do paint that, paint a million words. So go and check those out, and we'll see you next week for our chat. Before we do head off, Kelvin, trying to tighten up the section, but keen to get your highlight of your, sporting or your personal weekend or weekend or week.
Yeah, well, I mean, sport to follow on TV or whatever wasn't so great. Certainly not the Black Caps result or the Canberra Raiders result. Great for a Warriors fan, but not so much as a Raiders fan. So probably not on the sporting front. But yeah, at a personal sporting front, I suppose, for my daughter's cricket's still going pretty well. It's amazing to see kids just okay. They don't fully grasp the game or anything. There's still things which are pretty strange, but each week you can see a little bit of improvement, and it's pretty cool to see, and they really love it. 6, 7, 8-year-olds, it's all about the just participation, I guess. They're really having a lot of fun playing with their friends and mucking about a bit and just being a little bit silly. It's cool to see, and just that little improvement. The game just is a little bit more efficient each week. So yeah, that's probably the highlight. There's only one game to go though, unfortunately, so that'll all come to an end. We have to wait till next summer, but yeah, good to see kids playing sport and loving it and slowly improving too. So that was a highlight for me.
Yeah, absolutely. And spoken like a good sporting dad, which I can definitely relate to. And yeah, I'm surprised you even brought up the Warriors Raiders result, mate. So well done acknowledging that one. Certainly happy at times.
It's all about balance. Yeah.
Good call. Good call. Yeah, certainly happy a time for my team, the Phoenix, obviously getting a couple of wins on Saturday afternoon at the Cake Tin. So yeah, popped down to see bits of both of those games, the men's and the women's. So good little afternoon there. But my highlight, similar to yours really, it was the Weet-Bix Triathlon Sunday morning down at Kilburnie Park there. And first time our kids have done it, and I'm just so impressed with the event as a whole. Like, it was just so well run. Kids absolutely loved it. There's a lot of logistics going on to organising a triathlon for God knows how many kids aged from 6 to 15 years old. Man, just chaos, but brilliantly organised chaos. And my kids absolutely loved it and can't wait to go and do it again. So they're angry that it only happens once a year and not more frequently than that. So, mate, I just wanted to give a shout out to that. And if any other parents ever have the chance to, get their kids involved in something like that, or the triathlon itself, can highly recommend it. Like I say, logistics, early morning, bit of effort, But yeah, like I say, as a sporting dad, sporting parent, it's pretty cool to hear them say that and just enjoy and just the smile on their face as they're going through each of the different legs of that and managing difficult things like you think like transition too easily. So yeah, and doing it with their mates, like what joy. So yeah, massive shout out to that and anyone involved in that one. Massive event and very well done. So absolutely loved being down there, and yep, some tuck it out kids and parents alike at the end of yesterday, that was for sure, which meant I probably didn't pay as much attention to the Black Caps, which probably wasn't a bad thing in the end. Hopefully they can sort themselves out for the rest of the few games and might even catch them play this Sunday. So yeah, that'll be on my mind for the rest of the week, mate. But that's pretty much us for today. Anything else on your mind?
No, that's it. That's it. Another busy week ahead. We'll get stuck in.
Yep, no, totally agree, mate. And yeah, just want to say thanks very much for your thoughts. I know every week we've been leaning heavily on you, given what's going on in the Middle East, mate. So do appreciate your takes on that. Just want to say thanks very much for listening, though. Please do get in touch with any questions or feedback. Anything we're missing at the moment, please do let us know. But that is all for today. My name is Nick. He's Kelvin. You've been listening to the New Zealand Property Market Podcast. Mā te wā.